All right, everybody. I see a lot of you are trickling in right now, which is awesome. We're going to go ahead and try to stick to our agenda, though. So for those of you that are just joining us, you're actually getting in right at the perfect time. I want to welcome everyone here to another amazing session of the iFlip AI Circle webinar. We're excited to have you all join us again, as we do have a lot to discuss. So we're going to jump right into things as quickly as possible here. Today, we're going to shake up the agenda a little bit by kicking things off with the product update from the head of our product team. His name is Aaron Yoon. You'll hear from him in just a minute. Aaron will spend some time discussing some of the new feature additions that we've recently made to the iFlip trading platform. And if you're lucky, he might drop a few hints on some of the things that are up and coming as well. So stay tuned on that. After Aaron finishes up his updates, we'll turn things over to the man, the myth, the algo building legend himself, Kelly Korshak. This half of the webinar will be somewhat similar to the previous sessions that some of you have experienced if you've joined us previously. The one thing we are going to shake things up, I have a list of 4 to 5 questions today prepared to ask Kelly that seem to be centered around some hot topics that we've seen from some of our customers. So these questions will ultimately drive the update that Kelly provides today. As you tune into what both Kelly and Aaron have to say, please feel free to send us any questions you have, and we will do our absolute best to get to them in the last leg of today's webinar session. In case we don't get to it, no worries. We will be sending out a copy of the recording of today's webinar, along with answers to any questions that we don't get to today. With that being said, before I turn things over to Aaron, first, I need to cover the boring legal stuff. So we'll flip over to that. iFlip Investor and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments do involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. So without further ado, Aaron, I'm going to go ahead and turn things over to you.
Thanks, Heath. Welcome, everyone. Let me switch out of this and go to our web app. So today we're going to talk specifically about the web app and not so much the mobile. As you may or may not be aware, it's much easier to develop new features for a web app than it is for smartphones, because you have to deal with Apple and Google respectively. So that presents inherent challenges. Plus, there's a lot less real estate to deal with. So we're going to stick to specifically the web app today. And if your web app, when you log in, if it doesn't look like what you're seeing on my screen right now, let me go full screen so you get a little bit of a better view. If it doesn't look like this, you might want to try either a new browser, maybe private mode or incognito mode, or try clearing your browser cache. Sometimes things get tangled up as we do new releases. So most of the time it'll work, but if it doesn't, those are usually the go-to tips and tricks that we have up our sleeve to make it look like this. So the biggest feature, my favorite feature, is the fact that we can navigate much quicker with searching stocks now. We have a search bar at the very top. It's on every page of our web app. And if you type in I just typed in AA, there is a direct match to AA. So if I hit enter, I'll go straight to it. Okay, so this provides much faster navigation for manual trading. In addition, let me just type in AA again, search results show up. I can scroll through these. So if I wanted to take a peek at Advanced Auto Parts and Apple together, I can do that. So this is a new feature that we provided. I think it's really neat, and you won't have to deal with hitting stocks and loading new pages anymore. So let me go back to the home screen here. We also added 6 indices all across the top. So if you notice, the first four are ones you probably recognize: the S&P 500, Dow Jones, NASDAQ, and the Russell 2000s. Russell 2000, all with the respective ETF that you can trade with. We also added Bitcoin because, let's face it, crypto is a hot topic right now, and Bitcoin is what you use to, specifically the GBTC ETF is what we use to measure the movement in iFlip, in the iFlip app. Also, crude oil. If Kelly will touch upon this in a moment, but since COVID, paying attention to the energy sector has been very, very meaningful. So we also added crude oil in there, USO specifically. Now, perhaps the most important new feature for you as a user is probably these four cards over here. Now I'm going to go from right to left because it's, I'm going from easy and simple to a little bit more complex. Because the thing that's unique about iFlip is that we provide manual trading in addition to AI managed Smartfolios. So it's important to know how that divides up in your actual account. So the easiest statistic is how much money did you make today, right? So today in this account, we lost 10 bucks, 11 bucks, boo-hoo, not too bad. And this is the percent change for the total account today. You can see that it matches that of the performance graph on the account loss chart here. Moving over to the left, the open P&L box indicates my open positions. So I have $500 worth of profit running in the stocks that I'm currently have open. The ones that I've sold out of and taken profit on do not count in this section. And I have $900 worth of profit from the AI, so from the Smartfolio. So those two numbers added together gives me my total P&L. But it's also important to know how much money did I deploy? How much capital am I using to obtain this figure? And that's what this section here is all about, funds allocated. So I have $1,500, maybe under $1,600 worth of manual stocks over here. And in Smartfolios, I have $3,700 in the market and $1,200 that I've allocated to the AI to do as it sees fit. So it's kind of like it's saving ammo. And when it's ready to invest, it will buy. Okay, and that's something that's completely automatic. I don't have to touch it, but I'm allocating $1,200 for the AI to use. And all of these numbers added together give me my total funds allocated. Now, I can also buy manual stocks on my own, and that's what buying power is on this section over here. And I don't have any pending cash, but pending cash is just any amount of money that is destined to become buying power. So if you have a pending deposit, hasn't cleared yet, that would show up under pending cash. So my funds allocated, my funds allocated and my buying power added together gives me my total account value. These are all very important figures for just overall personal finance. And now we provide them to you on the homepage. So the next thing that we added was the performance chart. So if you click this arrow button, this expansion button here, you can see how your account has been performing in quarters or months. You can toggle, and or with measured in percentages or dollars, depending on which is more meaningful to you. At any given point, you can toggle back and forth. You can also see this on an individual position level. So if I'm holding, let's say, like I think I have a share of Disney. So let's open that. So you can see that I bought it on April 7th last year for this price. And I'm holding it for, I've been holding it since then with a total gain loss of about $83, which also equates to 45%. Now, Heath did mention that I would drop some hints about what's coming soon. That's pretty much everything that we have that's been released so far this year. But what's coming soon is the ability to see stuff like this, all of these for your entire account. We're calling it the full position screen. All of your open positions in one place. in a pop-up so that you can move it to a different monitor if you want. And so that most people have, if they're on a desktop environment, they have 2 monitors, you'll be able to use it. Another thing that's coming soon, this is super exciting, is the ability to create your own custom AI smartfolios. Kelly has designated a bunch of algorithms that work really well with a certain group of stocks, and you'll be able to pick from that database of stocks and create your own custom smartfolios. So those are features that are coming soon. And with that, I'll pass it over to you, Heath. I think that's it for me.
Good stuff. Thank you, Aaron. Really appreciate it. And if you guys have any questions about anything that Aaron said, feel free to pop it into a chat window, like I said, during this session, or feel free to reach out to us, support@iflipinvest.com. Our support team is amazing. They'll get back to you within a couple of hours. So a lot of good stuff around that. I'm sure some of you might have some questions around the custom smartfolio thing, because I know that kind of perks everybody up a little bit. So we will expect to field any questions that you guys have on that. So turning things over and switching gears a little bit, let's get into the meat of the session here and kind of get Kelly saddled up. We've got a question. We're going to start off kind of from the top. Kelly, describe what's happened in the market since we last met here in the AI circle, in the last month or so. And at a high level, what does that mean for the iFlip Smartfolios?
At the high level, it's pretty obvious what's going on in the market. Actually, if you can, let's share a quick screen. It'll be helpful on all the questions as well. Can I do that, Heath?
Yes. Yep. You should be able to.
All right. So I'm just going to go to share screen. Very good. Share. There. All right, everybody. High level, we're looking at the S&P 500. As most of you know, at a high level, the market is just simply going higher as a result of all the spending. We all know it. We know the action almost every day is a buying day, it seems. That being said, the S&P 500, according to our tactical model, is actually out of the market. And actually, we have lost over the last just more than a month. We've probably given up about 6% as the market has rallied from around the 390 level where we exited for a lot of people to the 420 level. So that's an increase of around 30 points. So it's about 6 to 8% higher, believe it or not. On a very high level, the market's extremely risky right now. As you can see over here on the upper right, we are now within 2.5% of the time the market ever trades in a position like this. Our AI and algorithms are all out of the market. We are expecting a correction. So the overall market is very strong. It is hard to correct when so much money is coming into the economy. However, I want to, before answering any further questions, kind of point out some historical facts. This actually happened before the 2019, towards the end of the year, where the market became unfavorable. We exited. However, we rebought very shortly after and then tried to ride the market up, but ended up giving almost all of that away as the market crashed under COVID. You can see we did very well through COVID, as most of you know, because we were out during this very significant 2 weeks time in March of last year. But I'm going to point something else out about the market before I answer again. Notice this has happened before. This is here going into the 2018 fall, where we also were very risky bet. We bought in. We also got out very quickly, and then the market came down and we tried to buy. Again, ultimately being out of the market, and then again repurchasing the market near the December Christmas lows of 2018. By the way, let's go back even further. Look at this. This is 2017, the same thing. We got out, we came back in. So look for us to come back in relatively soon. But look what always happens, a crash. Now, this case here the market literally went up for months before it crashed. And it turns out that very, very little money would have ever been made during this period. And this is why we trade algorithmically using artificial intelligence. And that's because when the market doesn't have risk reward characteristics that we like, we get out of the market. The market could go up more, but the algorithms and math feels that we can still buy it much cheaper than where we bought it originally. So, cheaper than where we sold it originally. So we are out of the market. The market remains strong, but look out. The market has all kinds of warning signs coming out from everywhere. That being said, there are still pockets of strength that I feel will remain immune to any such large corrections, and I'll go into that later.
That's good stuff, Kelly. Well, thank you. I think some of the concepts that you just highlighted might serve as a nice segue into this next question. Some of you may have noticed in your Smartfolios and your accounts, there have been some recent buys or sells triggered by the iFlip AI over the last 30 days. For example, AT&T recently sold off. The SPY recently sold off in some Smartfolios. And right after the SPY sold, the SPY hit new all-time highs. So when these types of events happen, of course, Kelly, some of our questions want to know why. So why did it sell under this type of circumstance, and what could they expect moving forward?
It's actually my first answering your first question was very similar to this one. The market sells because the main difference between a flip Smartfolio and buy and hold the market is we do not want to ride the volatility that the market gives. The market gives us two things. It gives us performance and it gives us risk. Right now, the market, as you can see again, what we just chatted about, the S&P has a sell signal. It's this little red dot is the sell signal. But notice that the price action after that still went up. We sold a strong market. But the reason we sold it is because risk and reward are disproportionate. And what we're looking to do over the long run is to be able to manage risk. So right now, there is far greater than 10% risk. As a matter of fact, currently, you can see over here, if it's very small, our risk right here is running, if my eyes are so bad, we're running around, it looks like my current risk is literally, oh, it's not showing it right there. I can tell you that the risk right now in the market is approximately 20%. The reward the market can give me is nowhere near 20%. In other words, we don't think the market in the S&P goes to 500 before it goes to 360. So if the bet is that bad, why should we be in the market? There will be a time where we can be back in the market, but it is not at this time. And this is how we protect portfolios for older people and people that want to manage their risk. And the way we do that is there are going to be times that we will be out of the market and the market goes up, and we will buy the market only when it comes down. This is one of those times. The risk reward is totally disproportionate. Everything, both algorithmically and artificial intelligence wise, every model shows us out. And it sure seems to be hard to be able to hold this position as the market advances daily. But regardless, there will be an event and a catalyst that will spur some kind of a sell-off. And when the sell-off occurs, whether it's small or large, the system will reassess risk and reward and make a decision at that time to buy and sell. That's why many of you will see signals such as in AT&T where it gets out and then it comes back in. Same thing with oil, same thing with many other stocks. They will enter and exit sometimes very quickly, or exit and then re-enter very quickly. Again, risk and reward changes every day. And right now on the overall market, risk and reward are not good. Now, that doesn't mean that it isn't good on some other stocks. And that's why you might see some change. Periodically, they'll sell out of positions and then rebuy them.
Excellent explanation, Kelly. Thank you for that. Let's talk about now about a new Smartfolio that we recently added, the Mod Plus. This is one of several new Smartfolios that we will probably be adding here into the app. I'll let Aaron cover those as those become available. But as it relates to the Mod Plus, Kelly, tell us why you put it together and what do you like about it? And what are some expectations that we should have on potential trades that it could make given current market conditions?
Mod Plus is actually created currently because risk reward right now again is on the margin. We feel that risk is much greater than reward, but the Mod Plus addresses this in many ways. If you look at the constituents inside the Mod Plus, you'll see, I'm looking over here, that it has banks, it still has some recovery stocks, but it also contains pieces of bonds and also some dividend paying stocks like AT&T and ExxonMobil. So it still maintains exposure to the to dividend stocks, but to the overall market in terms of larger assets like the S&P 500. It owns that. But what this does is it represents a less aggressive portfolio that should be deployed or thought of being deployed in a time where risk and reward are disproportionate. So risk is disproportionate to reward. So for those of people that are coming into the market now and they're older, or they feel the market is at great risk, this is a good blend to be able to manage any situation that could occur over the next, say, 3 to 6 months. It'll offer some performance that might be better than you might get when you're sitting in cash in some of our main systems. I'm not telling people to change or anything because the main systems work in their own way. But it is a good alternative generally to older people, people that are very risk averse, but yet still want the punch of performance that some stocks like Facebook, even if you can hate it, will give you.
Very nice. Well, and for those of you who, I know we've got a variety of different, types of customers coming from different walks of life on here. Some of you are advanced and pro users, and some of you are thinking of becoming advanced and pro users. So for those of you who are currently advanced and pro, feel free to log into your account. You actually have the ability to invest in the Mod Plus today. And for those of you who are not, by all means, feel free to reach out to us. We can put you in touch with one of our experts. They can give you some more information on the Mod Plus and any other benefits that come along with potentially upgrading your account to an advanced and pro status to get you access to these types of Smartfolios. So thank you, Kelly, for that. Shifting gears, actually, it's not really shifting gears in a sense. It's still, we're going to stay on the topic of Smartfolios. Are there any new Smartfolios that you can discuss with us today, Kelly, that are on the horizon?
Yes. Okay. So I actually have this chart up on purpose. As most of you know that have been with us for a while, we create portfolios in collections of stocks, which we call Smartfolios, that work under AI, but are also opportunistic. In other words, they're built to represent the issues of the day. So for example, right here is the red oil portfolio. Notice the green line at the bottom. That's red oil. That is the way red oil has behaved since down here, the last March crash low from COVID. Notice the buy signal that we see here on ConocoPhillips. This one is one element of the red oil Smartfolio. And notice where it is today. It was literally developed right in this area down here. It was already under a buy signal when we developed it. And when we did, we started talking about this portfolio and how it was meant to manage risk and reward 2 to 1. And so far, the way you guys have tracked will look a lot like this little green line. Notice the green line is very much close to its all-time high. Matter of fact, it hit one just the other day. Even though, for example, some of the stocks are below their all-time highs. That's the power of this. It tells me it's going higher. The new portfolios that are coming out that I'm looking at right now is some way of participating, and we'll find this out, on the new infrastructure bill. The new infrastructure bill is going to create opportunity because we know that somewhere between $2.1 trillion and $600 billion, the federal government is going to spend some money towards infrastructure. Now, that infrastructure could be everything from bridges and roads to child health care. I don't know how to construct it yet because on the horizon, we don't know what Congress is planning on putting together. But whatever it is, if it's a sustainable bill, even if it's not sustainable, it will last at least the remainder of this administration, which means that this will probably occur sometime late summer with the bickering that'll go on at first, in which case then I'll know what kind of stocks should be in these kind of portfolios. Should it be Exxon for rebuilding should it be US Steel for rebuilding a bridge? Or should it be healthcare providers like United Health that might be creating new ways of managing the elderly, or new ways of managing children that have health problems, or their mothers need to go to work, and we need to have home services. So this infrastructure, which is now a word that seems to collect all kinds of things that we can spend money on as a government, will create opportunity. But I just don't know where those stocks are yet. It was very clear at COVID lows what we should be buying that looked opportunistic, but we will do the same thing as clarity emerges from the federal government on how infrastructure money will be spent. Because clearly, if trillions of dollars are spent, or even $1 trillion is spent, we know that some stocks are going to participate greatly. We're going to find them. Yes, they're going to go up, and they'll be more expensive when you buy them than they are right now. But I don't know which ones they are right now. And I'm not even willing to guess. So the best thing to do is come in a little bit after it happens, collect a group of stocks like we did in this case, like we did for Red Oil or SPY, and then we will build another algorithm very similar to the one we're using now, and we will trade it that way. So yes, look for a new portfolio to emerge sometime within the few months, right after Congress has made clear what they're going to spend money on.
Got it. So it's a to be determined. Stay tuned kind of thing.
To be determined, but we kind of know where we're going to focus. We
Right.
kind of know that. We know there's going to be an opportunity inside of this infrastructure bill. We just don't know where it is yet.
Right. Good stuff. What are your thoughts? You know, as Aaron mentioned earlier, you know, crypto, Bitcoin specifically are very hot topics right now. So what are your thoughts? What are your most recent thoughts, I should say, on crypto and Bitcoin specifically? Are you bullish or bearish, and why?
Well, I think anybody that's been watching these AI circles for the last number of months knows that I'm very bullish this market. We noticed that we also had a pretty big sell-off just recently, but we had a pretty strong rebound. The sell-offs and the rebounds are due to institutional trading. I've actually been doing quite a bit of work in this area. We have AI now that is capable of managing some of these markets. Now it's about the execution of it. So where we stand is this: our platform will be offering a Bitcoin, direct Bitcoin purchasing, where you can put Bitcoin into your portfolio and you will take advantage of it that way, as opposed to the way we do it now, which is the GBTC, the Greystone Bitcoin Trust. Now that's a very good way. The newer way will be more dynamic. It'll have its advantages and some disadvantages, but I can tell you the main advantage is this: there is no decay in the price owning the Bitcoin outright. we've done well for people that have bought the Greystone Bitcoin Trust because it's gone up so much. It is a mirror of Bitcoin. I'm extremely bullish, but the caveat is it needs to be managed in such a way to be able to participate in the long run bullishness I have, and yet the short run volatility. So the reason we're going to build AI around this is so that we can take the way to trade this and the way to manage this is to have a core position of Bitcoin. Say between 3 and 5% of your portfolio should be invested in Bitcoin in the same way many investors invest in gold. But on the other hand, another way of managing this is through a shorter term trading algorithm to participate, especially on the long side of Bitcoin after its periodic sell-offs. AI is starting to show me information that tells me that we will be able to trade this on a shorter time basis as a non-core position. In other words, we can trade it with as much as a 5 or 10% position in your portfolio, and we'll trade it just like any other stock. The difference is it will be more active in its nature. And the nature of that reason is because there is the potential for this kind of a product to drop 50%. Well, if it drops 50%, clearly there would probably be a buy reason to own it at that time. And what I'm really looking to do here is that even now that we have mapped out the Bitcoin aspect on the AI, there's another aspect that's very important to know here that most people are not aware of. And that's the ability to collect whether it's retail that is buying or selling or institutional that is buying and selling. So nowadays, there is more institutional buyers. And what we want to do is stand behind the institutions, not the retail. Now, all of us here at Flip are retail, but I don't want our customers and the people that belong to the Flip community to be participating in it as a retail trader. I want them to participate watching what institutional money does in Bitcoin. So basically, I'm going to try to make our software stand behind institutional orders and ignore retail orders. So if I see them, if the AI sees the market going up, but it's going up because of retail, we're not a buyer. But if it's going up because of institutional, we are. And guess what? I've learned that we now can determine if the orders are coming from institutions, like, for example, Mr. Musk. He's an institutional investor in Coin and Doge and all these others. Or is it coming from Kelly Korshak, which is retail? You don't care about what I do. What you really care about is what people with larger pocketbooks, corporations, banks that are now stepping into this arena. We want to stand behind that. And that is taking a different kind of coding that I'm going to have to develop to build it. In the meantime, owning the Greystone Bitcoin Trust is fine. It's going to do well. Nobody even needs to change. But I do recommend that when the Bitcoin product comes out, that everybody take a close look at it. And it won't ever come out unless it meets the stamp of approval of me and actually many others that I look to for advice at the institutional level. So I have great hopes for it, and I'm excited to be a part of Bitcoin myself and for the whole Flip community.
So what you're saying, Kelly, is there may be a standalone Bitcoin Smartfolio, or do you envision Bitcoin being incorporated into one of our existing Smartfolios?
I think both. I think we will, as everybody's heard of Bitcoin ETFs coming out, we'll see what they look like when they emerge. But that doesn't mean we can't put together a Smartfolio of Bitcoin. It doesn't need to all be Bitcoin. Even though I believe mostly in Bitcoin, we still can add others to it. For example, Ethereum, in frankly, many others. And we could build our own ETF Smartfolio, which is really what a Smartfolio is. It's a baby, a micro ETF. And so, but we still have work to do because the volatility is so great. It must have an element of being able to be nimble. And right now, that's very difficult to do under just algorithm. It requires a great deal of AI work because there's not a lot of correlated aspects to Bitcoin. In other words, I can't find other what they call temporal data series to be able to match up to it to help guide the direction of the trades in Bitcoin or crypto as easily as we can for something, for example, like a stock or the S&P 500 index.
Got it. Good stuff. Well, this is actually a good transition into some of the questions that we've compiled. We've got a few here. One of them is specifically on what you were just talking about, Kelly. You mentioned ETFs. We had one of our customers ask, what exactly is an ETF? Can you explain that to them real quick?
Sure, of course. It's an exchange traded fund. All it is a manager that put together an ETF that says, I want to trade these 50 stocks, or these 25 stocks, or these 100 stocks, or in the case of the SPDR, which is 500 stocks, the S&P 500. An ETF is simply a collection of stocks.
Good to know. And so our Smartfolios is just a scaled down version.
Yes.
So, you know,
Red oil is it really, if red oil was an ETF, it would only contain the 4 stocks that are in red oil.
That's right.
That's it. It's just, but 4, instead of, we could get the oil ETF, which is the USO is the oil one portion type of oil ETF that trades futures, and it also trades some of the stocks that are oil related stocks.
Good to know. We had another question as well as it relates to creating and rolling out new Smartfolios. If someone is currently in one Smartfolio and we roll out a new one, are you able to jump into that new Smartfolio? The answer is yes, but this might be a good question. Aaron, might you be able to answer this one? And if need be, share your screen if you feel it being necessary.
Sure. Yeah, no, I can totally take that. And I'll share my screen again. Just start that up. Give me 1 second.
I will stop my share.
Oh, okay. Yeah, that'll help. Thanks, Kelly. Let me share my screen again. So the question was, when Kelly releases a new Smartfolio, will that be available? Absolutely. You would just go to start trading and you can invest in, you're not limited to just one Smartfolio. On the old platform, you used to be, but now you're able to pick and choose from the menu of Smartfolios that we see over here. And you can choose, the orange dot indicates that I'm invested in 3 Smartfolios right now. Let's say it gets released as on the, hopefully the free level. Then you would click the Smartfolio like so, and then you would hit enter at least the minimum investment, whatever that may be. I don't know what that's going to be yet. Enter at least that amount and click review order and you'll be in. It's that simple. We've made it super easy to really diversify across different Smartfolios now.
Which is a big difference, because this means that you don't have to choose one Smartfolio like we used to on the old platform. You can choose between many. And so now you would, instead of allocating amongst stocks that had algorithms on the old platform, you now can allocate to Smartfolios in the new platform, which means you get a lot more diversity in ownership of different concepts, all designed to profit in different ways.
Right.
Good stuff. While you're sharing your screen, Aaron, we had someone else ask, and I know you already answered their question, individually, but just for everyone to know, we had someone ask, do you have a table that orders your Smartfolios based on risk? Can you explain that?
Right. So yeah, so as long as I'm in the share screen here, so we do give a risk factor in the about section of each Smartfolio and a description of what type of investment thesis this Smartfolio is based on. But we don't have a table section Quite frankly, we just don't have enough Smartfolios yet to warrant that kind of a tabulated spreadsheet type of thing yet. But it's not a bad idea. Eventually, I think we will want to sort our Smartfolios by order of risk or by order of minimum investment required. As our Smartfolio menu grows, that might be a pretty good feature to have.
And also, I'll add to that too, is also that really addresses something called suitability. So
Right.
Our platform is a self-directed platform.
Right.
The way to make suitability more clear, we have actually designed, we have not implemented it yet, a way for people to answer a very brief questionnaire to kind of assess their risk. And that way it could create portfolio or show you a list of portfolios that say the top 5 represent your suitability, address your suitability concerns. And the ones below that become outside of your suitability. So this is a very important question. And I think we will improve, or not improve, add features to help guide people to things that are more suitable. So at the end of the day, if you're younger, generally everything is suitable. If you're older, things become less suitable. So when you're older, you don't put all your money in the markets because the markets are volatile. Even as best as we put together risk and manage it algorithmically, it still creates a little more volatility, much less volatility than you would have if you're just a plain buy and hold strategy. However, we can actually maneuver around that by suitability in different ways, by creating other portfolios like the moderate plus, which we talked about earlier. But these are the ways that we will try to help people determine what's best for them.
Absolutely. All right, guys, we have 2 more questions we're going to get to before we wrap up today's session. And then any other questions that trickle in, we'll be sure to get to them in our recap email that we send out along with a copy of the recording of today. So first question, what if you want to split across a few Smartfolios, but you are currently fully funded and have little or no cash buying power? Aaron, do you want to explain how maybe to sell out of a Smartfolio and divvy your money up across multiple Smartfolios?
Sure. So if you on the right pane of your web app, you'll see the owned stocks, and for Smartfolios, which are in the dark blue, you'll actually see the amount of money that you have invested. Whereas with the stocks, you'll actually see the stock price. If you ever forget, just know that you may not have noticed this before, but stock price, we don't put a dollar sign in front of it. But if it's money invested in your Smartfolio, there is a dollar sign in front of it. And you'll see, I do my best. This is just a personal thing. It's not advice or anything like that. I try to keep a similar comparable amount of money into each Smartfolio. So you'll notice that it's pretty close here. If you want to sell out of a Smartfolio, let's see. So I own this one. You would just hit withdraw, and you have a choice. You can either withdraw all of it if you want to just sell out of the Smartfolio completely, and hit review order. I'm not going to do it because I'm not in this one. Or you can choose a dollar amount to sell. Now, there's a caveat here. If you enter too high of a value, you'll get a warning message saying that this withdrawal will take this portfolio below the minimum investment, and it won't allow you to do it. So you got to be careful. And this is more of a personal finance type of decision that you got to make for yourself. But those are the 2 ways you can withdraw from a Smartfolio.
Yeah, releasing the funds so that you can invest them in a different Smartfolio.
Mm-hmm.
Yep. And one thing to note, and you guys will be informed when you actually go to withdraw, all of our algorithmic activity, they always run on the open of every trading day. So if you sell out today, on the open tomorrow morning, all of your positions will sell off on the open, and then it will take roughly 2 days for those sell orders to fully clear and convert into buying power. So you're looking at about a 2-day turnaround when you do sell out of a Smartfolio before you actually have that money in available cash to invest somewhere else. So that's just a heads up there.
That's just a T+2 because of the SEC.
You got it. And to cap things off, this is should be a reasonably short one. Will the new AI Smartfolios be available with IRA accounts in addition to the individual accounts?
100%. Yeah. 100%. I can show you that I can switch to my retirement account here. This is a Roth IRA account. And you'll notice that start trading, the menu looks identical. You can get all of the Smartfolios on your retirement account as well as your individual accounts.
Good stuff. So that is all we have today, folks. Thank you to everyone who joined us today, and to those of you who are watching the recorded session. We hope you enjoyed as well. If you guys have any other further questions that maybe trickle through in the next few hours, feel free to reach out, support@iflipinvest.com. We're more than happy to accommodate in any way. Kelly, Aaron, you guys have any final thoughts?
Yeah, I noticed there was a lot of other questions that are out there, and we'll get to them, all of them. Just make sure that we see them and we watch them. You guys are creating a lot of work for me to do to keep answering questions, but I'm very happy to do so. No other things. Everybody have a great week, and let's hope the market gives us some opportunities soon. I think that offer us a little bit better risk-reward opportunities, because right now, I feel, the risk reward is just disproportionate. I call it asymmetric. I want to leave everybody with that thought.
Good stuff. Thanks.
And for me, it's my first time joining everybody here on the AI Circle as a panelist. So I want to thank you for the honor, and I hope to join you guys again soon.
Oh yeah, you guys will be seeing more of Aaron, and we'll have a few other guest speakers as well. We may even have our CEO Randy Tate on, here in the next month or so. So stay tuned for more guest speakers to keep things spicy. So thanks everyone. Hope you all have a great evening, and we'll see you again soon.
Good night.
Bye-bye.